Hi, this is Michael Giralli with Healthcare Genius, and today we are happy to have Hannah Apodaca from Gravie with us to go through the healthcare plan comfort that Gravie offers to employer groups. As you know, at Healthcare Genius, if you've watched our channel before, we're always trying to bring information and education to employers and to individuals. So we hope you'll find this interview with Hannah very beneficial. So with that, Hannah, I'm going to let you introduce yourself, maybe give some background on yourself, and then also talk a little bit about the background of Gravie.
Perfect. Thank you, Michael. Excited to be here. Thanks for having me. I am Hannah Apodaca, like you mentioned. I've been at Gravie for about a year and a half, but in the industry for about 11 or 12 years. I started at Reliance Standard and have worked my way around and landed at Gravie, and have been super excited about what we're trying to do in the healthcare space, and just a super exciting time at Gravie. So to give you a little idea of who Gravie is, when we started. So we started in 2013. So we're not necessarily a startup, although our comfort product has only been around for about 2.5 years. So that product is a little bit newer. In 2013, when our founders founded Gravie, we were more in the individual marketplace space. So we offered ICHRA through QSERA. We built out our own marketplace for employees and members to log on and enroll in their benefits through our marketplace. With all the information we gathered over that 5 years plus span, from an individual member perspective, we knew we wanted to make a change in the healthcare, because as we all know, there's frustration with members having to pay their premium and then going to the doctor and paying more and more money, and they wonder, what is insurance for? So Gravie is truly, when we rolled out Comfort, trying to change the way consumers purchase and access healthcare. So our innovative plan design of Comfort, which we'll go over today, is trying to drive people to get the healthcare they need, which in turn, as we all know, is a trickle-down effect. And if they get the help they need, it helps the employer, keeps the employees happy. And so all around, we've had amazing success just with the feedback on how members are utilizing Comfort. The stats will show that it is working, and it's everyone's happy with it. So that is just a little background about Gravie.
That's great. Thank you, Hannah. Yeah, and I think you're seeing that adopted by some of the traditional insurance carriers now, where they're starting to pay for more services. Preventative care, of course, was part of the Affordable Care Act, but now adding other coverages for generic drugs and so forth. So we'll go through that. But how is Gravie different from your traditional, maybe your Blue Crosses, your Cignas, your Aetnas, your Anthems, those types of legacy insurance companies that most people are used to dealing with?
Yeah. So Gravie offers our product on either a level funded or self-funded basis. We have our own stop loss, so it's written on Gravie paper, which gives us a lot of buying power. We also, just the nature of our plan design, like you mentioned, is becoming more and more popular, but the things that we're covering is even more extensive than that. So preventative care, primary care, obviously, and then specialty is covered. We are driving urgent care is 100% covered. We have a bucket of other services. So in the instance that someone has to go to the emergency room, there's a copay, and specialty drugs are a copay. So the things that people in a situation don't necessarily think about. If an urgent care is open and an ER is open, someone might not think which one's the difference. Our plan design is truly driving lower cost, obviously, but the care is there that they need. So there's people on specialty drugs today that maybe a United or a bigger Buca of the world is offering like a $35 copay. Some people don't even think about that. I'll pay $35. Our specialty copay on drugs is $125. So people are actually going to stop and think about it and know generics covered for free. Maybe I should look and see if that's something that is of interest to me, and maybe there's a generic brand that's just like the specialty. So I would say just all around, our whole plan design is extremely innovative. That's the first differentiator. Although, to your point, some people are coming out, I don't think to the extent that Gravie's at yet, but they're getting there. Our second biggest point is that we are a very concierge service. So we have a Gravie care team, the whole room of licensed advisors that are there for member level support year round. They answer the phone to any members that have questions about network or doctors or hospitals, upcoming procedures, even prescription drugs. So there's that really hands-on. They can obviously help during open enrollment for members to make the best decisions for themselves and their family. We also have designated account managers for every single group that we write. So no size requirements. We feel that we treat everybody the same, and the 15 life group is just as important to us as the 100 life group. And we know that sometimes the 15 life group needs a little more because they maybe don't have an HR person. So just our whole perspective around how we can support ongoing, because when you support, again, it makes everyone happier, and we want people to love their health insurance. So I think those are two of the biggest differentiators of Gravie. Obviously a lot more, but in the short time, those are the big ones.
Yeah, no, that's great. That's great. And so when you talk about kind of the prescription drug coverage, I know you touched upon the fact that your generic drugs, there's no cost. So you really are encouraging people to be able to use that. And I think a good percentage of people do. And then what I liked about the different plan designs that I've seen that you all have is this idea that you can tailor it a little bit to meet the needs of your workforce when it comes to some of those copays. Is that correct?
So there's two things in the comfort plan design that can be altered. The one that is most consecutive upon every employer is the out-of-pocket maximum. So we will go down as low as a $750 out-of-pocket max, and we'll go as high as a $7,900 out-of-pocket max, up in increments between $250 and $500. So whatever our broker partners, we're very broker-centric, decide to show to their employers, we like them to give 3 options, maybe 2 or 3 comfort options, but that varies. The only other thing in our comfort plan design that can change is specialty prescription copay. So we can either pull that out 100% and just have the specialty go towards the out-of-pocket max, or we can insert that copay, and it's $125 copay. It's a small little load, but those are the 2 things that can be changed in the comfort plan design. One other thing to mention, just about you saying that it's different, is when Gravie, after, we still do ICHRA, but before we rolled out comfort, we also offered a bunch of traditional healthcare plans, very similar, almost exactly the same as what you'd find with United Healthcare and Blue Cross and all that. It was awesome. We did good, but as you can imagine, it was very relationship sale. People are coming to us that trust us, because people that don't know Gravie are more likely to go to the Blues of the world because they're, reputable, been around for hundreds of years. So it was a relationship sale, but today we still maintain those products. So we still have high deductible health plans and copay plans that you can offer right alongside of a comfort plan. So we don't want an employer that's been offering HSA dollars to their employees for the last 10 years to have to cut that off. Comfort's a first dollar benefit. So you can't have an HSA alongside that, but to offer that option to your employees still is a good thing. And we don't want to, comfort is different enough that we like for employees to still see the familiar plans.
No, and that's great to know, because as we know, there are a lot of employees who may be in high deductible health plans today, but they're only in there because of the premium costs, because of the lower cost, but they aren't necessarily funding for those liabilities that they could incur if they had a large claim or they had to go to the hospital. So it's nice to be able to have that benefit. But over the years, in my 30 plus years, certainly doing employee benefits and health insurance, a lot of people just are more comfortable having a plan that they know if they have to go to the doctor, it's going to be covered, or again, in Comfort's case, there's no cost for those types of things. So hospital networks, I know this is certainly in the individual health insurance market. Most of the companies have moved, well, all of the companies have moved to an HMO type of networks, narrower networks? How do the networks at Gravie work?
Yeah, good question. So what this is another good differentiator for Gravie. When you think about in the market today, a TPA or a stop loss company, you also think about narrow networks maybe, or what am I giving up? Gravie has rented either the Cigna, we utilize the Cigna PPO Choice Network, so one of the nation's largest, most saturated networks, or Aetna's Choice Plus network. So also their PPO, I'm sorry, Cigna's Choice Plus, Aetna's Signature Administrator, their ASA network is what we utilize for Aetna. So we have options for both. We also have a contract with them that says we won't cannibalize the network. So if we get a Cigna group, we'll quote Aetna and vice versa. But both are great networks. I mean, over my year and a half and looking at a lot of disruption reports, they're very similar and there's not much of a differentiator. They're all, I mean, it's everywhere. And a lot of companies that have employees either spread across the US or employees that are traveling a lot will utilize those two networks just because there's security knowing that wherever they go, they'll be able to access a hospital or healthcare where they are.
Okay, great. And another feature that I think is really important to employees should something big happen, again, if they had to go into that hospital, is your rollout of Gravie Care. Can you talk a little bit about that and how that really impacts the employee?
Yeah. So Gravie Care is actually the team of licensed advisors. What you're asking about is Gravie Pay. So this is also a super innovative solution that has been, when we first rolled out Comfort, there was some feedback on, it's this fundamental thinking for employers. It's hard because it's new, but to go from copays and co-insurance and deductibles and through those fees that they're paying right out of the chutes, it's funding their out-of-pocket max. When you go to Comfort, you don't have any of those, but you're not funding your out-of-pocket max. So in the instance that something happens, you're having to come out of pocket for $5,000. Some blue collar employees and even some white collar employees just don't have the savings to pay for that. So what we've created is something called Gravie Pay. It is a buy now, pay later, similar to like an Affirm online, but for healthcare. No credit check required, no interest. It never falls on the employer. So what would happen is an individual that's a healthy person enrolls in a $7,900 out-of-pocket max because they haven't been to the hospital in years and they have no upcoming, procedures or anything going on. They get in a ski accident. They'll go onto the Gravie Pay website, enroll in Gravie Pay, and they can spread that claim amount up to a 12-month period of time. We work with the employer. So the employer will either provide payroll deductions, which is preferred. So our partner patient is behind the scenes of that, and they will set up a payroll deduction with the employer. And then it just comes out of their bank account, or their paycheck. So again, up to a 12-month period of time, they can make bulk payments. Maybe they're just waiting on some money, who knows, but it's a great way and a little bit more of a security blanket for any members that are just in a bind. And we have a ton of stats behind how many people go into credit card debt for medical bills. And it just makes sense. And it has been everyone is so excited about this. So I'm super excited to have it. And as of 10/1, we are now including it in all of our quotes. It's going to be a bundled solution.
That's wonderful. I can't tell you how many clients over the years we've had where they might have held off a procedure. I know some individuals who have cataracts, as an example. A lot of times those may not be covered under the traditional medical plan. So, having a way to be able to cover those types of things and pay on time, or pay overtime is a nice benefit. So let's take just a few minutes to talk, because there may be a lot of employers out there that really aren't aware of kind of level funding or self-funding and the process of how that works. How does that work with Gravie from an employer, from an implementation standpoint, to get a quote and to actually look at rolling out this type of plan?
Yeah. So, like I mentioned earlier, we will offer comfort and our traditional health plans on either a level funded or self-funded basis. Level funded is self-funding. My favorite phrase is that level funding is the training wheels to self-funding. So you hold a little bit of the risk. We have a spec, which is a specific deductible, and an ag, so an aggregate attachment point for the larger group on every single group. So level funding is holds a little bit as the employer, they hold a little bit of risk in that they should be helping their employees make the right decision for their health plan, because at the end of the day, if there's any surplus, we will share 50% of that back to the employer. So even though they will never have to come out of pocket for any risk if they have a bad year, if they have a good year, they'll get money back. So it's a really good option for people that are going from fully insured and maybe looking at the self-funded option, but aren't really sure. The level funded is a really good start to going that direction. Not to mention, reporting is huge. So fully insured, you don't get to see what's going on with your population of employees. Level funding and self-funding, obviously, we provide all the data you'll need to see how things are running, where are your prescription costs coming from? Are people going to the emergency room as opposed to urgent care just because that's what they've done in the past? And we can truly help by going level funding, drive utilization of a member. So it's a good idea just overall to look at that in kind of a different way.
Sure, sure. And I think that reporting obviously really helps because most groups under 100 lives certainly have no idea of what's going on. They just get the renewal and are told that they're getting a 20% increase
Right.
or whatever it happens to be. So,
Yeah.
And then how does Gravie really determine if a company is a good fit for comfort through your process of what we would call underwriting?
Yeah. So Gravie is a little bit different in that as well. When we initially rolled out Comfort, we did, I don't know if it was Comfort or on our traditional plans, but we did try to utilize a system to help us do underwriting and pull the data that we needed, GRX, for example.
Mhm.
It doesn't work that well. The data is just not what is needed to understand the health and risk of a group. So we've gotten rid of that. And now we do either 2 years of experience. So if they're level funded or self-funded today, or even a larger fully insured group, we'll look at 2 years of their experience. Or if that's not an option, we do require individual health questionnaires. Our IHQs, our individual health questionnaires, are only about 10 questions, but it gives our underwriting team a really good idea of what's going on with the population, and then we can produce a quote. Same as 2 years of experience. It just is a really good way to look back at the health of a group, understand what the ongoing might be, and then rate accordingly. We are a forward-thinking underwriting company, so we don't load. Say, this is just an example because we're in this time, but
Sure.
say someone last year was in the hospital for COVID, or even 2 years ago. It's not likely ongoing if vaccinations, which are free under Comfort, but if they've been vaccinated and all that would likely happen again. So we're not going to load in the next year. Same thing for cancer. If someone 2 years ago has cancer, they've been treated, they went through radiation and they took a pill for 6 months. Now they're back at work totally full-time, no other issues. The likelihood of something happening to them, cancer related, within that upcoming year is so rare, it's not needed. We don't need to load our plan. So we say we're forward thinking. Our underwriting is trademarked. It's called surgical underwriting. So we really, really dig into the health of a group. And in the end, it's super beneficial for the employer too.
Yeah, I was going to say that's really helpful. So to determine if an employer is a good fit, because we know that not every employer is going to be a good fit for level or self-funding. So
Yeah.
This is a way that you can somewhat kick the tires a little bit, see if you're a good candidate, and then compare it to what, again, we see from some of the bigger insurance companies. So Hannah, any other areas, in conclusion that that we haven't covered or that you think, employers should know about when it comes to Gravie and your offerings?
Yeah, I think when people think about the concept of comfort and the fact that we're covering 85% of services for free, they immediately think dollar signs is what I would think. Hesitation because it is a lot richer plan. I mean, it's actuarial value upwards, starting at the 90s, but then going up 90% and upwards. What I would say is that we've done a lot of statistics, and it's showing that on average, members are saving $80 a month out of their own pocket by being on a comfort plan. Additionally, we're saving about 16% to employers that are coming on to any plan, but with Gravie, so comfort or a traditional health plan. And I'd say one of the biggest reasons for that is our underwriting style. So it's hard to get IHQs, and sometimes experience isn't there. But I would say just the diligent underwriting process that we go through really does pay off in the end. And the only way we can figure that out is by looking at them, right? And so just seeing the savings there is big for Gravie, not to mention all of the other perks and things that we have, both for our members and our employers. So
that's great. Well, I think we hear from, there's a lot of companies that have very good plans out there, but when employees are having to pay out of pocket for a lot of costs, they feel like, why do I have this plan? I'm paying all this out of pocket. So I think, really Gravie is a game changer in what you put together, both at the employee level to make sure that you're rewarding those employees and that you're getting the biggest bang for your dollar. And then from the employer side of things, where you can actually see some savings based on the way things are set up here through the level funding or self-funding. Yeah. So we're going to have some at the bottom of this video. There'll be some information on Gravie that you can check out, as well as some contact information. Hannah, we really appreciate your time today. Thank you for joining us. And again, Michael Girali with Healthcare Genius. If you haven't subscribed to our channel, go ahead and subscribe to it on the screen, and look for future videos on all sorts of topics related around healthcare and retirement. Thank you.
Thank you, Michael.